It is time now for Futures in Focus. The dollar rising as the ECB turns dovish. Let's go to Bill Baruch of Blue Line Futures at the CME. Bill, not just rising, but close to the high for the year. Does it stay there?
You know, it's a tough one to fade given the decisive move in the euro south. ECB, they really surprised everybody. You got, they were going to lower their growth forecast, but really taking that big dovish step was not quite expected just yet. But don't forget, there's non-farm payroll tomorrow. So if you are going to ride this dollar move or you're going to fade it, you have to know that there's going to be some big data coming out tomorrow. But if you're looking to fade the dollar, I think the better place to look would be gold. It had some technical damage last week, but a lot of support at 1280. If non-farm payroll misses, gold's going to be the one that capitalized the best between the dollar and the euro.
So what happens to yields from here then, Bill? I mean, if the dollar index is at 97.28 and the 10-year yield really stayed in its range, it's at 2.65. It moved a little, but not all that much. Does that mean that yields are diverging a little bit from the dollar story?
You know what? I like fading any rally in yields. So what I'm doing is buying dips in Treasury prices. I think you see these Treasury prices rally higher. I think the yields are going to go lower before the year is said and done. And ultimately, I think that's going to be the story. It's been working for the last couple of years. Anytime that these Treasury prices go lower, you got to buy them, and you got to see this thing look to rally. The Fed is going to make that. They've already made the shift to more dovish, but I don't see them really getting very hawkish unless there's some very sustainable longer-term view in the data. But that's not going to happen right away. We need to see 1, 2, 3 months out and consistent data that comes in better. So for right now, I think the path is higher on Treasury prices. The path is lower on those yields.